Let's take a look at how the European markets performed as at Friday, the 26th of May. Euro Stoxx 600 closed at an all-share index of 461.4, up by 1.16%. London FTSE closed at an all-share index of 7,627.2, up by 0.74%. The markets in Germany also saw the DAX close at 15,938.97, up by 1.24%, while the market CAC 40 Paris ended the week at 7,319.18, gaining 1.24%. And finally, the markets in Spain, the IBEX 35 closed at 0.82% higher with an all-share index of 9,191.1, closing positive. To the Nigerian stock markets now. At the end of the last weekday of trading on the NSE, a total of 461.78 million shares in 6,520 deals, corresponding to a market value of 7.66 billion naira, were traded. The current market capitalization of the Nigeria Stock Exchange is 28.84 trillion naira. And finally, here's a look at Wall Street as at the 26th of May. And now for some top stories. First, to the Congo, U.S. International Development Finance Corporation is reviewing $250 million in financing for the Lobito Atlantic Railway corridor between Angola and the DRC, according to the White House. The funding is part of President Biden's and the G7's Partnership for Global Infrastructure and Investment for Low- and Middle-Income Countries. The Lobito project is the first step to connect and develop trading and economic activity from Angola to the DRC that can help promote greater investments in agriculture, digital infrastructure, and expanded access to electricity, the White House said. The U.S. is actively pursuing additional opportunities to connect the two countries across the continent, as well as to Tanzania and ultimately the Indian Ocean. In its recently released working paper titled Nigeria's eNira, 1 year after, the IMF took stock of the first year of the eNira, the first central bank digital currency in Africa. President Muhammadu Buhari formally launched the digital currency in October 2021. The IMF said despite the laudable undisrupted operation for the first full year, the digital currency project had not yet moved beyond the initial wave of limited adoption. The fund said the take-up of the eNira by households and merchants has been slow, describing the public adoption of the eNira as disappointingly low due to the levels of wallet downloads and transactions. The fund said as at the end of November 2021, the total number of retail eNira wallets totaled about 860,000, a figure equivalent to just 0.8% of Nigeria's active bank accounts. Germany recorded its highest level of FDI, foreign investment, last year, with a surge in UK companies setting up operations to keep a post-Brexit presence in the EU. FDI into Germany totaled 25.3 billion euros last year, up 261% from 7 billion euros the previous year. That's according to official figures from Germany Trade and Invest. The biggest sources of investment were the US, which accounted for 279 projects, Switzerland and the UK. The total of 170 FDI projects originating in the UK was up 21% on 2021. US oil giant Chevron has said that it is increasing its US oil and gas footprint by acquiring shale producer PDC Energy in a stock and debt transaction worth $7.6 billion. For Chevron, the second largest US oil firm, the deal will increase its production, capital expenditures, and cash flow in the US amid global geopolitical tensions over energy supply following Russia's invasion of Ukraine last year. More than 100 US lawmakers and members of the European Parliament have called for the removal of the head of the UAE's state-owned oil company ADNOC as the president-designate of the UN COP28 climate summit this year. The UAE, as a host country for COP28 earlier this year, appointed Sultan Al Jaber to lead the climate summit to be held in Dubai from the end of November. In a joint letter addressed to UN officials and US and European leaders, including President Joe Biden and EU Commission President Ursula von der Leyen, the lawmakers call for the UAE to withdraw Jabber's appointment as his position as an oil executive risked undermining the negotiations. Nigeria's GDP grew by 2.31% year-on-year in real terms in the first quarter of 2023. That's 1.21 percentage points lower than the 3.52% recorded in the previous quarter and 0.8% lower compared to the 3.1% recorded in the corresponding period of 2022. That's according to the recently released GDP report by the National Bureau of Statistics, NBS. The Bureau blamed the lull in GDP growth on the scarcity of the Naira, which occurred in the first quarter of the year as the central bank held on to its Naira swap policy. Still on the central bank has revoked the licenses of 179 microfinance banks in Nigeria, as well as 4 primary mortgage banks and 3 finance companies. This was disclosed in the official Gazette of the federal government, which was published on the website of the CBN on Tuesday. The Gazette said that the licenses of the financial institutions were revoked because they ceased to carry on in Nigeria the type of business for which their licenses were issued for a continuous period of 6 months and failed to fulfill or comply with the conditions subject to which their licenses were granted, or failed to comply with the obligations imposed upon them by the CBN in accordance with the provisions of Banks and Other Financial Institutions Act. The Monetary Policy Committee of the Central Bank of Nigeria has increased its benchmark interest rate for the 3rd time this year by 50 basis points to 18.5% during its recently concluded MPC meeting. This was revealed by the governor of the central bank, Godwin Emefiele, at the post-MPC press briefing held on Wednesday, the 24th of May. This latest increase marks the 7th consecutive rate hike by the bank in its fight against inflation. The Wall Street Journal has revealed that a record $279 million whistleblower award issued by the U.S. Exchange Commission earlier this month stemmed from a bribery case against Swedish telecoms company Ericsson. The award from the regulator's Cash for Tip program was related to the $1.1 billion settlement the company reached with U.S. authorities in 2019 over allegations that it conspired to make illegal payments to win business in 5 countries. South Africa's central bank raised rates to the highest level in 14 years to rein in inflation expectations. The South African rand fell to a record low as Reserve Bank Governor Lesetja Kganyago warned that further currency weakness was likely. Still on South Africa, meanwhile, the country is prepared for legal fights with environmental groups over the government's plan to use ship-mounted power plants to resolve the nation's blackout crisis, the energy minister told the Johannesburg-based Sunday Times. The government has given permission to the Turkish company Car Powership to moor its power ships at 3 of the country's harbors in a proposal intended to end the prolonged power cuts that have hobbled South Africa's economy. The government is under pressure to resolve the problem, especially as debt-stricken state utility Eskom has warned it would only be able to supply electricity for half of the day over the winter period. Well, tough times there in South Africa. The chief executive of Nigeria's Upstream Petroleum Regulatory Commission, Gbenga Komolafe, on Thursday signed 7 regulations into law in line with the provisions of the Petroleum Industry Act of 2021. The 5 regulations include the Petroleum Licensing Round of 2022, the Petroleum Royalty Regulations of 2022, the Domestic Gas Delivery Obligations also of 2022, and Conversion and Renewal Regulations, as well as the Nigeria Upstream Petroleum Host Communities Development Regulation also of 2022. Meanwhile, the executive secretary of the Nigerian Extractive Industries Transparency Initiative says Nigeria lost 619.7 million barrels of crude oil between 2009 and 2020. He says these new regulations will help in curbing this trend. And finally, Africa is set to be the 2nd fastest growing region in the world after Asia in 2023 to 2024, demonstrating the resilience of its economy despite dealing with multiple shocks. That's according to the African Development Bank's African Economic Outlook report. The report was launched on Wednesday and forecasts that Africa will consolidate its post-COVID-19 pandemic recovery to 4.3% of GDP growth in 2024 from 3.8% in 2022. Some 22 countries will record growth rates above 5%, it says. It also recommends robust policy actions, including incentivizing green industries and providing guarantees at scale to de-risk private sector investments in managing natural capital across the continent. The launch was one of the highlights of the bank's group's annual meetings in Sharm el-Sheikh, Egypt, under the theme Mobilizing Private Sector Financing for Climate and Green Growth.